we do want to give our David Faber a chance to get back to the report he was about to give before we went to the president on LVMH. David.
Yeah, it's all in the timing, Carl. Thank you. We've been following this story, of course, of LVMH and whether or not it really wants to try to extricate itself from the Tiffany deal or extract a price cut. There'd been some reporting this morning indicating that LVMH had backed off from any sort of hope that it might be able to extract a price cut. But I can tell you from people close to the situation, people close to Mr. Arnault, of course, who is the CEO of LVMH, that is not the case, that the company does still, that is LVMH, remain focused on whether or not it will be able to somehow be able to engineer a price cut in the deal. Doesn't mean it's going to be able to do that, of course. They did remain unhappy with the fact that Tiffany made a decision to pay its dividend and that it paid all its rent, for example. The latest focus, though, for the company, LVMH, it appears, and Mr. Arnault, seems to be on Tiffany's leverage ratio. Under a bond deal, a covenants of a bond deal, it has to keep its leverage ratio at 3.5% or below. It's possible, as the summer goes on, given the performance of the business, that leverage ratio would exceed 3.5. And I am told by sources, again, familiar with the situation, that Tiffany is in the process of trying to negotiate a waiver with its lenders that will allow it to move its leverage ratio up to 4.5 times. Now, even if it's unable to do that, even if it's unable to actually get to that ratio, it's certainly possible the company could pay back some of a revolver or pay down some of a revolver it has right now and still be able to get below the leverage ratio. What does it all mean? Well, it still remains unlikely, Carl, in many ways, given the tightness of the contract, that Mr. Arnault will be able to actually figure out a way to claim a breach or find some sort of wedge to sort of get this price cut that they may be focused on. But it doesn't mean that they won't continue to try to focus on that very thing. And so we did want to share that as people keep an eye on shares of Tiffany, which are up in part because of the strong market this morning, but also because of the growing hope that perhaps they will have to stick with this $135 a share all cash deal that is expected to, well, not close perhaps until September, given the length of antitrust reviews. Carl, have a great weekend. Send it back to you.
Well, David, before you go, while I still have you, I mean, the week you've had on M&A, regarding this issue, TD Schwab. I mean, do you think we're going to start to see the gears loosen up?
Yeah, I think it's possible. Sorry, well, I turned phones off here. People were not prepared for me to be on TV at this time. The question, Carl, was about M&A overall, right? I'm sorry.
Yeah.
Things are starting to heat up a bit. They are, particularly given the confidence that you can see in terms of the market. Well, that sort of moves into the CEO realm. It allows you to potentially think about negotiating some sort of a transaction if and when you see your stock price starting to lack the volatility we've seen. And I am starting to hear about the possibility of conversations picking up. It doesn't necessarily mean, Carl, that we're going to see the fruition of those. But certainly there is more hope now than there was even a month or 2 months ago in terms of actually a resurgence of M&A.